Alright traders, it is Sunday, August 14th, and we're going to go on ahead and jump into the weekly watches video here. And, the last few weeks have been great. I mean, really, we've been on a pretty good run here since we launched the Big 3 indicator back in July. So pretty much like since July, I've had one losing trade in Pepsi. So we're on a good roll. We are looking to keep the momentum going, but major thing to just be mindful of, things are getting a little bit silly here. So I think the bulls have got control. I think the bottom is in. And I actually think we could probably continue to rally all the way into the next Fed meeting in September. But in the short term, the S&Ps are a good 4%, 5% above that daily 21. We're a little bit extended, so a pullback would be welcomed. A pullback would give us much better entries, but nonetheless, guys, we've got to work with what we got. So we'll go on ahead and jump in here, take a look at a few charts, build up the watch list, and get ready for the week ahead. Alright, so we'll jump in here, guys, but a quick update on the trade spreadsheet. So this is a spreadsheet that we're using to track all the trades that we've done, both in my mastery and the options room since we launched the Big 3 indicator back in July. So for the mastery trades, and keep in mind, personally, I'm risking 5% of my account per trade. So that is the math here on the spreadsheet. And, we're using a $50,000 account on the spreadsheet in terms of the math. The major thing to focus on is the percentage return. That's what really matters, whether you've got a $50,000 account, $5,000, $1 million. Maybe you're a big timer like JC. You got a couple milli. But anyways, guys, so since we launched the indicator in July, we have done 9 trades. One loser in Pepsi, and then last week we came into the week with a call debit spread on Tesla. Got rid of that on Monday for 116% profit. We also had a put credit spread. Pretty uneventful trade. Pocket change, right? Small profits, we'll take it. And then on Friday we bought options. We bought calls on Nvidia. We also did that in the options room as well. So in terms of percentages, if you're taking all these trade alerts, risking 5% of your account, we are up about 20% over the last, pretty much month and change. So even if you're risking 2.5%, pretty good stuff there. So down in the description, guys, we got the link for the mastery. They actually bumped down the 30-day trial to $7. So check that out. Hope to see it in there. But yeah, figured I'd give you guys an update, and we'll see how this looks come next Sunday. All right, guys. So I don't want to be too repetitive in tonight's video. Here's the thing. The bulls have got control. I do think things are getting a little bit nutty in the short term. Definitely some euphoria going around. But at the same time, we really can't ignore the improvements that we've seen here. The Qs, the S&Ps, most of the market has pretty much come up here over the last couple of weeks and really cleaned up the daily trend and structure. We've got weekly charts looking much better. And in some cases, guys, we've got monthly charts that realistically never looked anything but bullish. So, good signs of progress. It's just a difficult spot to want to blindly get long. The QQQ is a good 5% above that daily 21. The S&Ps are about 4 to 4.5% above their daily 21. So, in other words, you could buy a bunch of calls on the QQQ on Friday. The market could gap down 4+% tomorrow. Structure is still fine. So just because we're extended, it definitely doesn't mean that we have to pull back. All I'm trying to say is be mindful of this. Don't get caught up in the euphoria. Pick your spots wisely. I don't think now is the time to feel the FOMO. I think we could actually grind a little bit higher in the short term before we pull back. But just be disciplined, guys. Focus on good entries, but at the same time, make sure you're actually structuring your swing trades in a fashion where if the market does pull back for a little bit, you're not taking all kinds of pain and damage. Now, here's the thing. Like I said, just because we're extended does not mean we have to pull back. So typically, we're going to get that flush back down towards that daily 21 pretty much when the bulls have reached a point of exhaustion. When the bulls have shot their load, then you got a chance at the flush. So for the QQQ here on the Big 3 signals, no signs of slowing down just yet. We've got 2-hour, 1-hour, 30-minute, 15-minute, 5-minute buy signals. So in other words, the trend, the momentum of those 5 lower time frames, it's as bullish as possible. Yeah, we're extended, but pretty much we've got a full gas tank here under the surface. So what's usually going to happen is we're going to continue to push. Then the 15-minute chart goes from, the 5-minute chart goes from bullish to neutral, runs out of gas. Then the 15-minute, the 30-minute, the hourly, pretty much the bulls run out of gas at these extensions. We don't know exactly when that's going to happen. That's where I think the big 3 indicator is pretty clutch. We don't want to short things up here, nor do we want to doubt, just how long these kinds of moves can last. Just focus on the pretty colors. So when we wake up one morning and the S&Ps and the QQQ are just pretty much neutral, meaning there's no buy signals even on those lower time frames, then we probably are going to get put it this way, at that point, there's a better chance you're going to get the flush. But for now, guys, locked and loaded, the SPY has got buy signals on the 2-hour, 1-hour, 30-minute, 15-minute, 5-minute, and the IWM here has got the 2-hour, 1-hour, 30-minute, 15-minute, 5-minute. So before we jump into the stocks here, that's kind of the big picture view. Last, let's call it 3 weeks, the bulls have really done a great job rebuilding the trend and structure on these daily charts. They've done such a good job. They triggered such a big short squeeze. Things are a little bit nutty here in the short term. So it's not that we have to pull back because we're extended. It just pretty much means keep playing ball here. Pick your spots wisely. Take your trades. But just understand, when we start to lose these buy signals, pretty good chance mama market coming back down to earth. Now, before we pull up the watch list here, a couple more things to take into consideration. And I know we talked about this a couple of weeks ago. All we want to focus on as traders is just the pretty charts in front of us. Right? Trend, structure, the price action. That's the only thing that matters. The bullshit in the news, the bullshit on Twitter, just you got to tune all that noise out. So I know the world is pretty bearish right now. You spend a few minutes on YouTube, kind of looks like everyone's looking for a crash. Here's the thing, guys. The structure of the daily charts, that's really improved. If we check out the weekly chart here of the S&Ps, this is really improved as well. 3 weeks back above that 21 EMA. Weekly chart here of the QQQ. That's really improved. Weekly chart here of a name like Tesla. About a month. Yeah, just about a month straight back above that weekly 21. Of course, the weekly chart of Apple looks beautiful. And then if we take it a step further, I think the monthly charts offer a pretty interesting perspective. If you think back to like 2020, March, April of 2020, kind of felt like the world was coming to an end. Similar to right now, back in March, April, May of 2020, you had COVID, we had all that craziness. So the news, the narrative was super bearish. But check out the monthly chart. All Apple did during the quote-unquote crash of 2020 was pull back to the monthly 21 EMA. It found support, and it continued that trend. So even though the world was coming to an end for a little bit, the trend structure momentum here on the monthly chart of Apple was never anything but bullish. Same thing this time around. So we've had this little 7 or 8 month downtrend, but from a monthly charts perspective, Apple's been as bullish as possible. So if you look at the S&Ps here, the point I'm trying to make, guys, is, okay, now here's the S&Ps. We're back above that monthly 21 EMA. We've got a squeeze. This could all change this week. And I don't think you ever want to marry your ideas as a trader. So believe me. If and when this all changes, we got to make the adjustments. But the point I'm trying to make for now is the bottom of 2020 was put in by trend, structure, momentum, and price action. The news didn't tell you the bottom was in. The narrative didn't change. Pretty much at the peak of bad news, trend and price action told you it's time to get long. So for what it's worth, guys, the structure of the monthly chart starts to improve. The structure of the weekly chart starts to improve. And in the short term, we have a little bit of daily trend going. So for those reasons, I do think until something changes, path of least resistance for the market is to the upside. We don't want to get stupid, so to say. So pick your spots wisely. Maybe we continue to push. Maybe we just rip all the way towards 435 without a single flush. I think in a perfect world, we get a little pullback, maybe down towards 415, 410. Then we can get long. Then we can play the push back up towards that 200. So I do think the S&Ps can make it towards 435. What I don't know is whether or not we get a flush first, or if it's basically a straight shot there. So there's a big picture thought process, guys. I am looking to buy the dip. Now we'll jump into the watch list. So frankly, not too many changes on the watch list this week. And, we pretty much got two watch lists. The buy the dip watch list. Then we got the watch list of things that are actually trading at our entry at the 21 EMA. So as far as buying the dip, here's my whole thing with buying the dip. The easiest trade, easy meaning it covers all your bases, I think is just buying the dip in the S&Ps and the QQQ. So if the S&Ps can pull back towards 415, 410, if your QQQ, which of course is a bit more tech focused, but if the Q-tips can pull back towards 320, 315, I think buying that dip with some September expiration calls, maybe a put credit spread, I think that covers all your bases. Meaning if the utility sector continues to rally, and the transportation sector, and the semiconductors, and XLK, if all these individual stocks and sectors continue to rally, it's going to be driven by the indices, the S&P and the QQQ. So, you look to buy the dip in the market, or if you're looking to buy the dip in a stock, the major goal, guys, is we want a little bit more edge. In other words, it has to look better than the overall market. So as far as my buy the dip watch list, numero uno, the big dog, big macaroo, Apple. So check this out. Apple's like one of the first names, like between the indices, the sectors, the FANG stocks, like the first of the important stocks in the market, to actually get back to the point on Friday where we've got a daily buy signal. That's big time stuff, guys. So my indicator here, we can't get a daily buy signal unless both the daily chart and the weekly chart fit all of my bullish criteria. And the same thing goes for a 5-minute buy signal. Can't get a 5-minute buy signal if the 5 and the 15 don't fit the full criteria. So in other words, trend structure momentum for Apple on the daily chart and the weekly chart, it's as bullish as possible. And for what it's worth, we got the full bull stack. Daily 4-hour, 2-hour, 1-hour, 30-minute, 15-minute, 5-minute is bullish as possible. So very extended, very bullish. As long as those lower time frames are lighting up here like a Christmas tree, the move can continue, guys. As far as a swing trade entry, I think any dip down towards 165 to 160, of course it has to hold support, but if we could get a dip like that and it actually holds support, I think it could be a bit of an early Christmas gift. So Apple is on crack, big 3 up the wazoo, but as far as Apple offering a little bit more edge than the S&P's of QQQ, we'll take a quick look here at the weekly chart. It looks like Apple wants to retest the highs. That's how good things look here. So we got 4 weeks in a row, closing back above the weekly 21. The moving average itself is starting to curl towards the upside. Histogram might go positive this week. So all of a sudden, this weekly chart has gone from bearish to neutral to borderline bullish, if not bullish. Here's the real kicker, though. The monthly chart. So like I mentioned earlier, the whole COVID flush, from a monthly charts perspective, if we're just going to focus on the ebbs and flows of the market, the COVID crash on a monthly chart was literally nothing more than just a pullback to the 21 EMA. Pretend we're looking at a 30-minute chart. Squeeze fires long, reversion to the mean, continuation. It's a monthly chart, so it's all a bit more dramatic. That's a 2 to 3 month flush. That's a 4 to 5 month rally. It's all a bit, bigger, so to say, than the move you're going to get from a 15-minute or a 30-minute chart, of course. But the point I'm trying to make is the ebbs and flows of the market, trend and structure. Apple never got bullish here on the month, bearish rather. Apple was never bearish back here during that COVID flush. Perfect trend, perfect structure, green 10x bars, stacked EMAs, basically everything on my bullish checklist continued to line up. Now, this little flush that we had so far this year, this kind of looks like nothing more than a pullback to the monthly 21. So pretty interesting, right? The world is as bearish as possible. As far as the monthly trend here for Apple, it's never been anything but bullish. We've pulled back to the 21 EMA. We've held really good support. There's stacked EMAs, there's green 10x bars. Pretty much I would have a monthly buy signal if the big three had a buy signal. So trend is bullish, momentum is bullish, structure is bullish, and we got the big whopping monthly squeeze. So the monthly squeeze, right, the squeeze tells us Apple's building up energy. We're gearing up for a big directional move. All the other criteria. The fact that we're above the 21. The fact that we have stacked EMAs, 10x bars. The fact that every single time frame inside the monthly is as bullish as possible. That all leads me to believe, unless that all changes, this squeeze wants to fire to the upside. If this was a 60-minute squeeze, and we're in a 60-minute uptrend, we have 60-minute buy signals, I'd have to think that squeeze fires to the upside until proven wrong. So from a monthly chart to a weekly chart down to a 5-minute chart, Apple is as bullish as possible here, guys. Number one on the buy the dip watch list. In a perfect world, at some point we get a flush towards 165, 160. At 160 you got your daily 200 SMA and your daily 21 EMA. I think a perfect spot. So just understand the significance of that. On that next pullback for Apple, if it holds above that daily 200, this all looks like bullish trend again. Your monthly chart has always been bullish. Now you've improved the weekly structure. Now you're holding pullbacks to the daily 200. Kind of points towards a pushback towards all-time highs. So we're looking to buy the dip here in Apple, guys, and then in addition to that, Tesla is pretty much in the same camp. So yeah, we had a couple trades here last week. You do have your daily 200 here as pretty big resistance. So kind of look at the last couple of weeks as your first test of that daily 200. Fails the first test, which is kind of normal. The key here is that flush to the daily 21 EMA. It held up perfectly. Now we got some buy signals here. So we're on our launching pad, and our 2-hour, 1-hour, 30-minute, 15, and 5-minute charts, they all suggest path of least resistance is to the upside. So as long as Tesla's hanging above that daily 21, we're looking to get long. We're looking for a push initially towards $950 to $1,000. But as far as a little bit of extra edge here in the Tesla, quick look at the weekly chart. That really improves, but again, it's the monthly chart. Has never been anything but super, super bullish. Crazy ass push. Reversion to the mean. So here's your first pullback to the monthly 21 EMA since October of 2019. Reversion to the mean. We hold good support and structure. We've got stacked EMAs, we got green 10x bars, we got a squeeze. So the squeeze tells us we're gearing up for a move. The trend, the structure, the momentum, that all kind of points towards that squeeze wants to fire to the upside. And that would take Tesla into a brand new all-time high. So unlike Apple, this one actually offers an entry here. And we've also got the stock split coming up on the 24th to the 25th. So maybe a little bit of a catalyst to add some fuel to the fire. But as far as the structure goes, the daily 200 is a big spot. But if we can actually break above it and hold, then I think the door is open for a push towards $950 to $1,000. So Tesla looking pretty good here, guys. And those are pretty much the top 2 names here on the buy the dip watch list. Now I'll take you through a few other spots as far as maybe a few actionable ideas here for the week ahead. One of them being the semiconductors. Keep in mind this is all market dependent, meaning the semis are going to roll over if the market rolls over. So assuming the market keeps its act together here for a couple more weeks, I'm thinking the semis have got a door. I'm thinking the door is open for a push towards that daily 200 SMA. In the short term, this all behaves a bit like trend. Back above that daily 21. First back test holds. And here's the significance of that. For the S&Ps, the Qs, etc. A couple of weeks ago, guys, that was the first time in over a year where we got back above that 21 EMA, pulled back to it, and actually held up. Then we got continuation. Then we got the next back test of that 21. We held up. Then we got continuation. So for the semis, I'm looking for about 260 here. And as far as the semiconductor stocks go, kind of digging Nvidia. So we bought calls in Nvidia in the options room and in my mastery last week. So for Nvidia, initial push, first back test, holds beautifully, continuation. There's your next back test, holds up pretty good, and now we got the ultimate combo. What I think is one of the best trades in the world. Daily squeeze, lower time frame buy signals, 2 hour, 1 hour, 30 minute, 15 minute, 5 minute big 3. So the rocket is on the launching pad, and the lower time frames are telling us we are ready for liftoff. So for Nvidia, we got earnings coming up on the 24th. So that kind of offers an interesting opportunity. Typically, I'm not ever a fan of buying out the money options. But with earnings on the 24th, what we could do is go, and here's what we did. You can go with the August 26 options, so the options that expire the week of earnings. So we bought the 190 and the 195 calls. And like I said, typically I'm going to go with like a Delta 70 if I'm going to buy a call. But because you got earnings coming up in a few weeks, kind of offers an interesting opportunity where you can buy these out the money calls or the puts. I'd kind of go with the calls for now. But you can buy those out the money options, and we don't want to hold it through the earnings announcement. So pretty much, guys, the whole idea is get long, catch a move towards your target, which for us is 200 to 205, and then you keep it moving. But as far as the strategy selection, you can buy those calls, the out-the-money calls that expire a couple of weeks out from earnings. Buy the calls that expire the week of earnings, a couple of weeks away from earnings. You don't have to worry about the premium decay as much. Those calls, those puts, they hold their premium as the implied volatility tends to rise into the earnings announcement. So in plain English, we can buy these calls on Friday. We don't have to worry about them going to zero between now and earnings. So some 190 and 195 calls there on Nvidia. We've got our stop on the close under that daily 21. And yeah, we're looking for 195 to 205. Really good structure, really good setup. We're at that 21. We got the buy signals. All beautiful kinds of stuff right there. Now, the reality is, as goes the market, goes the stocks. So if we wake up tomorrow, Mamacita S&P's down 3%, more than likely down goes Nvidia. But we'd like Nvidia for next week, guys. We got some calls there. And, as far as a few other semiconductors, AMD looks pretty good. I'd like to buy that a little bit closer to that 21. And Qualcomm, not too shabby. Qualcomm actually looking really good. Some big resistance here at that 200. You can see how the first test kind of failed. But you've got your first test. You pull back. You hold support. Daily squeeze. 1 hour through the 5 minute. Big 3 buy signals. Kind of looks good for a push towards 160. So we're looking to buy the dip in Apple and Tesla. We got some calls on Nvidia. And one other spot to watch here, guys, I think is ARK. Pretty much anything with the potential for a big short squeeze. So ARK shapes up pretty good here. And I might think Well, I do think it's not going to happen in a straight shot, most likely. But if the market continues to, hold up here, and we do actually rally or just continue to trade higher into September, I think ARK's probably got a pretty good shot here to push towards that daily 200. So we're coiled up here in that daily squeeze. We've got 2 hour, 1 hour, 30 minute, 15 minute, 5 minute buy signals. All looking pretty good here in the short term, guys. So as far as a few ARK components, of course you've got Tesla. Then you've got Zoom. Zoom is a little bit sloppy here. We're above the 21, we're below it, we're neutral. It's a tough read. It's a bit of a tough read. What I like a bit more would be something like a Shopify. Kind of fits the mold of a big potential short squeeze, but the structure is much better. We're holding above that daily 21, we got the squeeze. We don't have too many buy signals just yet, but early this week, as long as Shop holds above that daily 21, and then if we can get a couple buy signals here on the lower time frames, 15 minute, 30 minute, we'll buy some calls, we'll put our exit under the 21, we'll look for a push towards 48, maybe even $50. So Shopify shaping up pretty good here, y'all. Then, there's kind of a couple scan results here. I do like BMY, so this shapes up, I think, really well. Got your flush. Now we're kind of rebuilding that daily chart with 4 closes back above our 21. You can see the histogram goes positive. So momentum goes positive in the squeeze. And our 30-minute, 15-minute, 5-minute chart goes bullish on the big 3. So this kind of points towards, as long as the market holds up, could be gearing up for a push towards 78. But at the end of the day, number one thing to respect, as goes the market, goes the stocks. So if the S&Ps pull back this week, there's probably a pretty good chance I might finally get my opportunity to buy the dip over here in Apple. And I gave you all the reasons I want to buy the dip in Apple. I actually think Apple might want to head back towards the all-time highs here. But if the market does pull back, alright, it might give me a chance to buy Apple in the dip, but Nvidia is probably going to take some damage. Right? BMY is probably going to take some damage. So would a Shopify, etc. So we're kind of at this point, guys, where in the short term, it feels like maybe there's 10% of this move left. I don't mean a 10% move. I mean, from the move that started back here at that 21 EMA, I think we've seen like 90% of this push. Meaning we might go a little bit higher in the short term. I think eventually we're going to go neutral. We're probably going to get a pretty quick flush. So in the meantime, just be cautious. Right? Pick your spots wisely. I think try to limit your overnight exposure. You don't have to go to bed with 3, 4, 5 open positions. And you can do the perfect, you can do everything perfectly. Nail the perfect entry on Nvidia. You got your daily squeeze. You got your stacked DMAs. You got your buy signals. You can do everything perfect. And it's not that Nvidia is extended, but the overall market is. So you can take a perfect entry. You can time it like to the T. Everything lines up. But if the market pulls back, we should expect that pullback everywhere. So, quick recap, guys. I do think moving forward, path of least resistance is to the upside. The monthly charts, quite frankly, never really got bearish. In some cases, they're super bullish, like Apple and Tesla. Now we're starting to see the weekly charts improve. And of course, over the last 2 to 3 weeks, the daily charts have certainly improved. But the short squeeze has been so vicious, we are a little bit overbought with the S&Ps accused a good 4+% above that 21 EMA. So we don't know when we're going to pull back, but we know at some point it's coming. It's a coming, and it's probably coming when things go from bullish to neutral. So in other words, we can be extended, but we get a bunch of buy signals here on the big 3. The party probably continues. So the watch list is buying the dip in Apple, looking for an entry anywhere near 165, 160, so long as support holds. Tesla kind of sets up the entry now. We're at that daily 21 EMA. We got a good handful of buy signals here. As long as Tesla's above 800, I think you got a shot here to break out and a push towards 950 to 1K. So Apple, Tesla, then we got some calls here on Nvidia, looking for a push towards 195 to 205. And then I do think some potential in the short squeeze candidates over in ARK. Right, so we're thinking Shopify, we're thinking Roku. Kind of waiting for Roku to clean up a little bit. We're thinking T-Doc. They're all kind of setting up here, guys. So focus on what matters. Price action, the pretty colors, the chart in front of you. The news, the narrative on Twitter, it's never going to tell you when the bottom is in. Price action never lies. And when I say price action never lies, what that means is if I wake up tomorrow and my S&Ps are down here at 380, guess what? Everything just changed. No way I would continue to be bullish. But I'm going to be bullish here as long as the structure of a monthly chart, a weekly chart, a daily chart, down to a 5-minute chart tells me that looking to get long with a good entry is the game plan. So there you have it, guys. It's been a long weekend. My fiance had her bridal shower, and I hung out with my dad and my uncles today. We had some cigars, we had some wine, we drove some loud cars, all kinds of good stuff. So I'm tired. I'm going to go chill here for a bit, but I am looking forward to the week ahead, guys. So I hope you found these videos helpful. I try not to ramble too much, but I definitely appreciate the opportunity to, talk shop with you guys. Kind of get these thoughts out there. So enjoy the rest of your Sunday. I'll be live tomorrow morning here on the channel at 8:45 a.m. Eastern for our pre-market prep. And like I mentioned earlier, come on over and check out the Mastery. We got the trial down to $7 per month. So hope to see a lot of y'all in there. Otherwise, until next time, I'll talk to you soon. Be good, and see you tomorrow morning.